welcome to Money Control. I'm your host Nikki Manchandani, and continuing with our conversation series for this Diwali, we have a special guest with us, Vijay Chandok, who is the Managing Director and CEO of ICICI Securities. He is here to talk about the fine business performance in the previous year, the investor experience, changing trend in the broking industry, and of course, expectation from the year ahead. Now, let's understand all of this from Mr. Chandok. Thank you so much for taking out the time and joining us at Money Control. I'm going to start off by asking you how this year has been for your business. Do you see the momentum continuing next year too?
Yeah, actually, if you look at this year, it started off in a rather tepid manner. The first month and a half was pretty tepid, but I could clearly see the momentum gathering pace, particularly in the last half of first quarter. And thereafter, the momentum only continued increasing. So I would say this year, while it started a little slow, it has picked up rather well. And quarter two, I must say, was a record quarter for us. All our businesses fired. And when you just look at quarter two, which concluded some time back, we ended with a all-time record profit after tax. On a YY basis, the profit after tax has gone up by about 41%, sequential basis as well. So it's been, I would say, all round good quarter for us, which ended. The year started slow but has picked up great momentum.
That sounds pretty optimistic to begin with, but let's also talk about the retail investor participation, which has thus far been holding the markets at least for last couple of years, and this year it's no different. Do you see that participation continuing?
Yeah, actually, if you look at the participation, I'd like to just explain it in perspective over slightly longish period. If you look at the pre-COVID phase, we used to find newcomers coming at a certain pace. That pace was about 5 million a year. And come COVID, we saw a dramatic scale up of this, I think thanks to combination of factors, including digitization that has been going on in this industry for a while. And we could clearly see that in the 2 years, once COVID started, this number of 5 million went to almost 3.5 crores. That's about 35 million. So there's been a huge scale up that we've seen. There was a scale back a bit last year, but even after the scale back, we were still significantly higher than where we started pre-COVID. So, if you look at the momentum, I think the momentum has been gathering pace. It was probably peaking 1 year in the second year of COVID. Last year was a little muted. It was in a relative sense. But in the last quarter onwards, once again, this momentum has started picking up. But I think it's important to reiterate the point that even despite the slow up, we were significantly higher compared to where we were in the pre-COVID era.
Okay, got that. I also wanted to ask you, do you think the Sebi study on traders losing money is perhaps causing unhappiness, unhappy experiences that would dissuade investors from trading? Or is this now turning out to be an addiction of sort for traders who cannot do without them? Your assessment.
Yeah, no, I think that's a great question. And if you really ask me what SEBI has been doing a bunch of things to protect the investors. So this study included actually was designed fundamentally to sort of tell the investors as to what really was happening in the larger market, so that they are able to take a more informed call about participating in the markets. I think in that sense, we must commend SEBI for coming out with a report and sharing it so in such a transparent manner with all the investors. And today, the investor is really aware about, far more aware about the risks associated. And therefore, when he's participating, he's walking in with open eyes. He understands that this is a risky area to go. Even not just at that study, but every time he logs in, there is a kind of a notification which pops up in the app, in the website, which is visible to him, which actually highlights the facts that it is a risky business and the kind of experiences some of the investors have had over time. So I think all those measures are extremely good for the longevity of retail investors, and the retail investors can take an informed decision participating. So I would really commend SEBI on that. That said, we have continued to see a growth in investors' interest in participating in the markets, given their strong belief on the India story, I suppose.
Well, point well taken. I would, taking a step back, how is the discount broking business model shaping up right now? How do you strike a balance between profit and the investor welfare? Your assessment overall on the business model.
Yeah. So actually, if you look at the whole concept of discount broking, it is predicated on fundamentally two aspects. One is that you're able to deliver the services to the customer digitally, and the understated sort of capability that gives to the broking entity who's doing that is efficiency and low cost of servicing and meeting the customer needs. The second angle is that it is going to make a good amount of money at scale, because a digital business inherently has the ability to scale with virtually very low capex, rather very low opex. So you have a very high operating leverage. So if you rest your business model on the back of these two premises, that you run it in an efficient and all digital format, and you also run it at scale, uh, I think keeping in view your cost structures under check, I think you can actually create a winning story. And we've seen some of the players in the market doing that so effectively. More and more players are understanding this. It takes time to create scale. So as scale comes and as costs come under control and check, efficiency kicks in. Broking model actually works in favor of both the investor as well as I would say the broking entity.
That point is well taken. I would also want to understand from you, ICICI as a broking outfit, what are you typically doing to better the investor experiences out there?
So we've been doing a bunch of things. We do believe that investors eventually come to market to make money, and that's one of our principal motivations and objectives of serving the investors with that lens in mind. In the last few quarters and beyond, what we've been actually focusing on is improving what we are able to deliver to the customer in terms of his needs and wants. So, first, I would say we've significantly enhanced our own platform. We've launched an exclusive platform for traders called ICICI Direct Markets. We've launched our new app, which is ICICI Direct, which is targeted at both traders and investors combined. It's a super app, very well rated. Investors like it. We've also come out with new plans, number of very efficiently priced plans with some power pack features in form of instant liquidity. We call it EATM, with access to low cost margin finance, which helps them trade and back it up with research. Our research is very soundly backed by the expertise of our research analysts, which is well received in the market. So all of them are packaged through efficiently priced delivery plans. And we've also added more recently tools which help and protect investors from various types of risks. For instance, we've launched something called iAlerts. These alert customers from taking calls which can be risky. So just at the time of closure of a transaction, you pop a risk alert so that customer is again able to read it, fathom it, and then take a decision either to stop or proceed with the transaction and trade. So a bunch of tools of that nature have also been added. All of this aimed at meeting customer requirements and enhancing his experience. In addition to this, I would also add one last angle. We've been focusing a lot on investing in technology at the back end so that we're able to use a combination of data and analytical models that are getting developed, and using technology to try and deliver at scale personalized experiences. We are still, I would say, early stages in that journey, but that's the way we are focusing on as we are moving ahead.
But last final question that I have for you, and perhaps a little more broader perspective out there, what's your biggest takeaway from the last year and the expectation that you have from the coming year, both in terms of your business and markets?
I think last year the whole world was faced with a fair amount of global headwinds, as we call it. There has been high inflation in the US, the geopolitical uncertainties, and most parts of the globe were slowing down. I think in such a context, it's been a story of resilience for our country, our economy, for our corporates, and that was on full display amidst all these uncertainties that the rest of the world faced. I think India's came out extremely in great colors, and it is not by by sort of accident that this has happened. There has been a good amount of planning and design behind it. And if you clearly see, the last few years, we've been, as a country, focusing a lot on the fundamentals, the macros, ensuring that we live within our means. Even during the COVID period, the way in which we dealt with the difficulties was in a very targeted and a sharp manner, unlike some of the Western economies, which eventually caused so much of inflation. So I think the manner in which we have run is fundamentally correct way of running it without being profligate. That's helped the economy and economic macros, which has helped us stay resilient. The corporate sector, on the other hand, for the last several years has been sort of delevering. And again, in difficult and uncertain times, a delevered corporate entity is able to withstand variations in market demand, supply, and various issues that come up in a far more resilient way. I think that was in full display. So it's a combination, and then we've seen the Indian banking industry, which has been focusing on improving credit quality, and they are important providers of liquidity and what I would say the lifeblood for running an economy. They are in great shape because they focused a lot in the last few years on improving credit quality. They are liquid. They've strengthened their capital. So the economy, which is focused on the fundamentally right things, the corporates, which is focused on delevering and keeping themselves more resilient, and the banking sector, which is focused on asset quality and corporate capital augmentation. All of them actually stood in good state, coming together and ensuring India remained resilient. And I think that's the big lesson for us to take away as we think about future and uncertainty, the outlook. So I'm pretty optimistic of the future, and I think the setting makes me very confident about investors having a good time if they start looking at it from a slightly more medium-term lens from here onwards.
All right, that was quite in perspective, but we're just going to leave it at that. And thank you for taking out the time and speaking to us.
Thank you so much, and once again, a very happy Diwali to you and all the viewers and their families.
All right, with this, it's a wrap. Thank you so much for tuning in.